Yahoo reported record first quarter profits. The company earned an operating profit of 13 cents a share. That was 2 cents more than the street had expected, and it's up from the 8 cents they did last year. Yahoo also announced a 2-for-1 stock split. For more on the company's results and a look ahead, we are joined now by Sue Decker. She's Yahoo's Chief Financial Officer. Ms. Decker, we thank you for your time with us this morning.
Thank you for having me.
You know, we read some of the analyst reports on Yahoo, and one analyst wrote this morning that there's really not much not to like in this quarter. Tell us a little bit more about it.
Well, we were really pleased with our quarter. We feel like we got off to a great start in 2004. Pretty much all the metrics that we look at were terrific. Most importantly, we're doing very well with consumers and seeing record traffic in our major properties, and that's translated very well into financials. We had very, very strong top-line growth, coming in at $550 million in net revenue. That fell down to the bottom line in terms of EBITDA, came in at $211 million, and on down to the earnings that you mentioned. So extraordinary growth, really, on all the metrics.
Ad revenue linked to specific web searches, that really boosted your revenue in the last quarter. What kind of growth do you see ahead for this area?
You know, the advertising side is very robust. This is a continuation of some of the trends that we started to see last year, and it's and more validation that the internet is really offering a wonderful solution for marketers' needs, both branding and all the way to more of a return on invested committed sales and transactions. In terms of the growth rate going forward, we said yesterday on the call that we felt our marketing services line could grow close to 35% this year. In aggregate on an organic basis. So that's even before acquisitions. We think it can grow 35% this year.
You've also got increasing competition, names like Google, even Microsoft likely to come more into this picture. How will you keep the momentum in your earnings with competitors like these on your heels?
You know, our objective is all around enhancing consumer experience on the web. And competition is nothing new to us. In fact, we think it raises the bar for all of us and makes the experience better for consumers all around. So we are seeing record traffic in a lot of our major properties: search, mail, shopping, personals, news. We feel like we have a lot of experience in the area. We listen to consumers and have been able to deliver very innovative products.
Ms. Decker, how much of the performance that you delivered in this last quarter do you think is attributable by the overall economic improvement that we're seeing, not necessarily just in the U.S., but global?
Well, certainly having a strong economy is a great foundation to facilitate the growth of all companies, and that's certainly a factor for us and others. I think what makes us very pleased about the growth that we've been able to deliver is really the secular growth that you can see, which is not related to the economy, more sort of the market share that the internet is taking from traditional forms of media and communication. You can see that as the audiences grow very, very rapidly and they spend more time on the internet, marketers are really reevaluating how they should spend their money, how they should reach their target objectives, and are committing more and more money to the internet as a way to achieve broad-based branding and more narrowly targeted objectives.
Well, as people commit more money to the internet, are you going to be doing more hiring?
We are. Our talented employee base is our most important asset. We are hiring very aggressively in some of our key areas in search and mail, our core products. And at the same time, we're balancing that and reprioritizing where it makes sense with our overall cost structure. So one of the great things about our model, actually, is that we've been able to invest the appropriate resources in the appropriate areas for consumers, while also delivering at least 50% of every incremental revenue dollar to the EBITDA line, and almost 70% of that on a long-term basis to the free cash flow line. That's a pretty unusual financial model, while also investing for growth.
Ms. Decker, speaking of your financial model, you've got about $750 million in debt. Are you looking to reduce that load in 2004?
The $750 million in debt that you mentioned is a convertible bond that we issued last year, and we are not looking to reduce that. We feel very comfortable with that, given the very significant cash on our balance sheet, close to $2.8 billion at the end of this quarter, up $200 million, notwithstanding some investments we made in new companies.
Ms. Decker, we thank you for your time with us this morning.
Thank you.
Sue Decker, CFO of Yahoo, and that does it for this hour. Thanks for being with us.